You know exactly what I'm talking about. And once we get there, hey, all bets are off, guys. Hey, you know what happens when we get ourselves to that when we get ourselves to that month of December. I don't know what happens. I don't know particularly what happens, but I know that this lovely city that I live in, it turns into quite a different place. It turns into quite a different place, East London, to the extent, Pof, that you might find that wherever we are and whatever we are doing in the town of East London just becomes magnified and amplified. Regardless of that, though, guys, we need to be safe about everything we get up to. We need to be vigilant. The drinking and driving needs to stop. And on top of everything else, if you can just identify a destination and actually just be there, I think that's the safest thing. Anyway, those aren't the only safe bets. One of the other situations that we get going are the fact that one of the other situations that we get going. Sorry, I'm just having. We've got a feed already. You can kill that one. Yeah. So one of the other situations that we want to get compliance and everything ready with is that the end of the year, whether you are a business person or an individual, there's tax situations which you always need to look into. And of course, our resident tax expert from the Tax Cafe, Fanizwa Mavuso, and she's with us namhlanje again. Fanizwa, how are you?
It's
been a couple of weeks.
It's been a couple of weeks. It's been a couple of very busy weeks.
Yes.
But I am good.
That's good. Welcome back.
Thank you.
What are we touching on today when it comes to tax? Remember, we said we can't eat an elephant in one sitting.
Yes, that's true.
So we need to break it down into little bite-sized pieces that we can digest and then let people process. And if they have questions, maybe to come back and ask.
Yes, so it's always best to start at the beginning. So today we're going to start at the very beginning in terms of what it is that we are actually declaring. What is the income that you need to declare to SARS? That is what we're looking at. Income as defined in the Income Tax Act.
What is declaring, by the way?
Declaring, okay, so we start there. Declaring is the annual return submission that you do. So every year you submit a tax return to SARS, and that is the declaration that you make to SARS.
Okay.
So remember, if you're employed, your employment information would have already been fed through to SARS.
Yeah, but it's on the central system somewhere.
Yes. Okay. So your employer actually has an obligation to feed that information to SARS every month.
Okay.
So as you get a tax deduction on your payslip every month, the tax deduction that you get goes to SARS in that month. So every month SARS receives a tax payment from you via your employer. And then at the end of the year, what you need to do is to declare all of your income. So not just your employment income that SARS already has, any other income that you may have.
To say this is how much I made this whole year with my side hustle, with this, with that.
That's correct. Okay. So if you've got rental income, maybe you've got a property that you're renting out, then you would declare that. Remember, your employer would not have access to that information.
Right.
So then that's where you then need to step in and make that declaration yourself.
I see. Right. So let's go forward then.
So basically, gross income is what SARS calls it, because it's all of your income. From all of the different sources, and it's specifically defined in the Income Tax Act, and there's certain sort of items in that definition that I want to have a look at today.
Okay.
The first one is the year of assessment.
Okay.
So the last time I was here, you would remember that I said the tax year does not start from January to December.
It's not a calendar.
It's not a calendar year.
Yeah.
There's a specific definition of a tax period or a tax year.
Yeah.
Which is the period in which you are declaring. So when we talk about the 2021 tax year, for example, we're talking for the period 1 March March 2020 up until the end of February 2021.
Okay.
So the tax year or the year of assessment is that March to February period.
Okay.
So that is the declaration that you'll be making for that period. So when you look at your rental income, for example, you wouldn't take your rental income from January to December. You take your rental income for that March to February period.
Okay.
As well.
Okay.
And then the other definition is resident.
Okay.
Now, resident is different to citizenship. You are a resident of South Africa if you call South Africa your home.
Okay.
So if, for example, you were born in Namibia, you lived in Namibia and all of your family's in Namibia, but you came to South Africa for work purposes, and every time you get a chance, you travel home. So be it your holidays, you go to Namibia.
Birthdays, weddings, funerals, all of it.
So then for the purposes of the Income Tax Act, you would not be resident in South Africa, despite the fact that you earn your income in South Africa. So for all South African residents, people that determine that their South Africa is their home, then you would declare your gross income. You would declare all of your income, wherever you incur it. So for as long as you call South Africa your home, you then need to declare your worldwide income to the South African revenue. A case in point, say for example, I get called out to New York for 3 months.
Right.
And I work there in New York for 3 months. I'm physically in New York for 3 months. I need to, in South Africa, declare that income that I made in New York.
Because you're a South African resident.
Because I'm a South African resident.
Got you.
The reason for that is, should anything happen to me in New York, the South African government would immediately step up, use their resources to repatriate me from New York.
Ah, okay. So it's one of the diplomatic duties.
Yes.
For tax paying. Okay.
South African tax-paying individuals.
Got you.
So even that income that I made in New York, I need to declare it and have it taxed in South Africa.
Because it needs to come back here.
It needs to come back here. And then if we look at the Namibian resident, for example, he would only need to declare the income that he made in South Africa while he was in South Africa.
Okay.
Because should anything happen to him while he's in South Africa, say he gets robbed, his cell phone gets stolen, his laptop gets stolen, he would then report that to the South African police, and the South African police would step up to find his property. So then for the period or the time that he's in South Africa, he's got access to South African resources.
If the Namibian guy has a car wash business that his brother is running in Namibia, that doesn't need to be declared here.
No, that's his brother's business in Namibia, and that would then be catered for by the Namibian government.
Got you. Got you. All right. You are still going. You are still moving.
Yes. So a point that I've just touched in, the total amount in cash or otherwise. So back to my example of, I'm now working in New York. Say my manager in New York gives me a car, for example.
Like that side. Okay.
So I haven't received cash.
Yeah.
I haven't received cash payment. There's no money in my bank account, but I've received this asset which has a cash value.
Yes.
So that I would also need to declare, because the definition of gross income says I need to declare my total amount in cash or otherwise.
Okay.
Because
so that falls under otherwise.
It falls under otherwise. Yes.
Okay. This and how does that calculated? By the value of the asset at the time.
The value of the asset when I received it. So the market value of whatever vehicle I received. Yes.
Okay. I'm still with you. If you do have any questions, WhatsApp our voice note 076-0916-462. That's 076-0916-462. Comment on our Facebook. We are live as well on the Keith and Gessie radio page. This will also give you full access to Fanizwa. She is with us today. And should you find yourself having any of the questions, we are right here in the building for all of that. It is just 10 minutes now before 12 o'clock. So, Fanizwa, we've now calculated all of that, and I've declared my gross income.
Okay, before we move on, there's just one final part of the definition that I want to touch on. So it says excluding receipts of a capital nature. So a capital nature, the reason why they're excluded under here is because capital items are declared in a separate part of the formula
Okay.
or the return, which we will look at another time. So say, for example, I received a house that's a capital asset. And then, so that house would not form part of the gross income declaration.
Because it's not like a cash transaction.
Yes.
Yeah.
So it will form part, it will be declared, but just at a later part of the return because it's calculated differently.
Okay.
So the calculation for the house, for example, will happen on the side, and then there will be a bringing in of that value.
Is capital asset taxed differently to?
Yes.
Okay.
That's correct.
So that's why it's in a separate.
It's separate, yes.
Okay. Got you. So what happens going forward now?
So you declare all of your income, and then there's certain deductions which you can claim against that income.
Okay.
Some of which I touched on the last time I was here. For example, medical aid,
Yes.
travel allowances, retirement and annuity contributions, donations, if you made any donations. So, but the donations is tricky because it needs to be specifically to a public benefit organization, which is registered specifically under that section.
So an NPO.
Yes.
Okay.
But it must be registered not only as an NPO with the CIPC, but it must be also registered as a non-profit organization with SARS.
Okay.
There is in this Income Tax Act a section 18 which deals specifically with that. So it must be specifically registered under that section 18A provision in the Tax Act.
Okay. All right. And when we are at this point now, what happens?
So you declare all of your income, you deduct all of your expenditure, you bring in all of your capital allowances, and then at the end of the calculation, it'll calculate what you owe. So say, for example, you owe 50,000, then it will bring into effect what you've already paid in terms of pay as you earn,
yes,
or any provisional tax payments that you've made, which I want to touch on that on a separate topic.
Yeah.
But basically, the pay as you earn is what goes through your payslip. So that's the deduction you see off your payslip.
Which is why the amount that you earn in total is not what appears in your bank account.
Yes.
Because that's taken ahead of time to accommodate the pay as you earn.
Yes.
Right.
And then there's a separate one called the provisional tax payment. So if you're a provisional taxpayer, what basically a provisional taxpayer is someone who earns other income other than salary income.
Okay.
So if you are earning your rental income, you would be a provisional taxpayer, because on that rental income, there's no employer or there's no other body that's deducting tax every month of your payslip.
Right.
So then you become a provisional taxpayer, and then it's your obligation to deduct tax.
Okay.
So that when you file at the end of the year, you don't sit with a huge tax.
So you
amount.
become responsible for the percentage of tax due.
That's
from
correct.
what you're making for your rental.
Yes.
Right.
That's correct.
Okay. I think in the interest of us not overeating this elephant, we'll suspend it here. She's here with us every Wednesday at this time. And we are going to get into it. Don't be afraid to ask your questions. Send us email info@keithingesiradio.com or info@thetaxcafe.co.za.
That's correct. Yes.
And that's where you can ask her questions directly as well. Fanizwa was here with us every Wednesday, our resident tax expert. We've got a property expert. We just try to do the things that get people the right kind of what can I say, compliance, number one. And beyond compliance, we also want you to be comfortable to make decisions and knowing that you've been informed about these things. And some of these things, really, it's just about repeating them to yourself until you remember it, because actions speak louder than words, as they do say. So all this theory is out there. But when we talk about resident experts who come and help us, we're talking about people who deal with this on a daily basis, and somebody who can clear it up for you, even if you have something that you believe is a silly question. There's no such thing as a stupid question. There's some stupid answers,
True.
But there's no such thing as a stupid question. Like
No.
if you really want to know, you have no crime in that.
Yeah.
Funny. So how do they get in touch with you before I let you go?
So you can contact me telephonically on 061-874-2546 or via email, as True Star has said, on info@thetaxcafe.co.za.
We'll be with you next week, this time 11:40, to catch up with another avenue of tax, because we feel like compliance is the best way to go. And our resident tax expert from the Tax Cafe will be joining us once again. Thank you so much.
Thank you so much for having me.
We'll see you next week.
Cheers.